Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is May the 1st, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. I want to first start off by taking a look to see how the indices closed the session out here for the day. The Dow Jones was down 138 points or so. The Nasdaq was down a little over 29.5 points, and the S&P 500 was down close to 15 points. If we take a look at the breadth on the market today, we had 4,879 issues declining on the NYSE, Nasdaq, and the Amex. We had 1,246 issues advancing on the NYSE, Nasdaq, and the Amex. So breadth was definitely in favor of the bears on a about a 4-to-1 basis here. Okay, so let's go ahead and take a look at the market, starting off with the SPY daily chart. This is our S&P 500 ETF here. You can see one thing that pops out on the chart real quick here is that the volume trend, all right, it's starting to get broken here, and we have the volume coming into the downside. We also have lower close off these two consecutive higher close after peaking to new highs, making new highs by a penny yesterday. All right, so this could be a potential double top. All right, of course it's not going to be a double top yet until I would say until we break back below 157 and maybe come down here, that we could say, okay, recognize that as a double top area. All right, or if we break some of these little pivots down here, we can say, okay, they sold those highs as a double top. All right, in any case, level that you want to watch on the SPY going forward, okay, if we continue to get some sell side action, it's going to be that key level that we've been tracking for the past 2 months or so. All right, the past month, at this 157 level. All right, was resistance. Try to hold it support, got cracked, got back above its support, and now we're going to see if it's going to act as support again right here, same way it did when we got above it. All right, so 156.84, call it 157, is going to be the key level to watch. It also lines up with this little 20-day exponential and simple moving average right there around 157.37. 157.31. So keep an eye on that right there. As far as the top side goes, of course, today's highs 159.41. Yesterday's highs 159.72. So a lot of interesting action here. The markets were down across the board, the broad markets. The financials got hit a little bit today. We saw some pullback action in the basic material stocks, and it has a lot to do with it has a lot to do with the news that's going to be coming out tomorrow out of Europe with the rate cut decision. The dollar got a nice little bounce today, which we're going to take a look at here real quick. If you take a look going into the morning session, we got our traders prepared for a risk-off trade because the dollar sold off here. We were breaking down out of this little bear flag. This is a 30-minute chart, by the way. And then around 9 o'clock, the dollar started catching a bid off that little sell-off. The euro started selling off. We had the 10-year Treasury notes breaking out around 8 o'clock in the morning. We had the 30-year bonds breaking out around 8 o'clock in the morning. We had the Volatility Index gapping up. We had the commodities down. That alone right there, folks, tells you that risk is off. All right. At the same time, all right, this is some of the information that we provide to our traders that trade with us. They trade remote. They're usually in our mywallstreettv.com trading room, online interactive live trading room. Or some of them trade out our office. We have offices in New York, and we just got an office down here in Miami. So if you're in the area, you're more than welcome to stop by. But in any case, risk was off. At the same time, I posted on the Facebook page, our Wall Street Trading Facebook page, that we were in a rising wedge. You guys can see the rising wedge pretty clean here. Okay. Mark this up for you guys again here. We were in a nice little rising wedge that my friend pointed out to me, my Instagram friend. He pointed that out to me, and it was a good setup to watch. Okay, I mean, either way, we had some nice sell signals on our channel system. Okay, off this little breakdown right here, breaking this little key trend line, and notice how we stopped right here. All right, this is some of my proprietary channel analysis stuff. We bounced right there a little bit, but then we came right to our 50% channel line, and we got a nice little bounce there. But we were able to catch most of this move today in our trading room. Again, if you would like to join us in our trading room, whether you trade futures, E-minis, or equities, we do it all. Come and check us out. Okay, so let's keep this thing rolling here. Let's take a look at the ES real quick, because that's what we track in our live trading room. And the ES, I showed you guys this chart before about 2 weeks ago. I have not been able to show you guys this again. But if you go back to a 2-year daily chart on the ES, on the S&P 500, let me take off these studies real quick. All right. You can see that this head and shoulders pattern that we broke down out of here back in May, we broke down those trend lines are still relevant. All right, starting off with the trend line from the top of the head. Keep it on this trend line right here as I move the screen. All right, the neckline, which is this other blue line right here. These are the sorry, this is the neckline right here, but these are the shoulders. All right, we keep these relevant trend lines on the chart. We've been having these trend lines on the chart ever since we were able to make them back here from May of 2012. Okay, so now if I drag the screen to the right, zoom in a bit here, that same key trend line, all right, is this blue one right here from the top of the head and shoulders pattern. Notice how throughout the session, all right, not throughout the session, sorry, it's been a long day, folks. throughout the past, through the past couple months here, we've been hanging above that key trend line from the top of the head and shoulders pattern that failed. All right, now we have this level right here. We took this trend line, we drew our parallel trend line. All right, this trend line right here. Draw a little parallel trend line. And you can see how we were consolidating this little range. We broke above it, trapped some longs, faded back down. We got back with that key trend line, popped above it right here, and now we sold off right on top of it. So if we break that key trend line, we're going to be looking for a retracement back down towards this 1555 area, 1560 area in the coming trading days or the coming week or so. All right, if we start holding below 1575, 1570 area. All right, better yet, today's lows. If we start holding below this 1576 level, and then we break below 1570, we're going to be looking for a retracement back down there, at least for the first target around 1555, 1560. So we'll keep you guys posted with that. But again, it's always important to keep key trend lines on your chart as long as they stay relevant. If you even have to hide them just to keep them out of the way a little bit, hide them. But they are important, as you can see how that trend line has been guiding us through the markets pretty clean, along with some of our proprietary channel analysis stuff that we have going on right here. On my little other little mini chart I have, you can see how we're starting to form this little pennant pattern off that key trend line that I showed you guys, and off this little key trend line from my channel system. So if we consolidate a bit here and chop around a bit, we're going to kind of form like a little wedge, and we're either going to break out or we're going to have a nice little move down. Again, if you follow us at wallstreettrading.com, you'll be right on top of that as we will be. All right, taking a look at the triple Qs here. The triple Qs are at the top of that channel. They're pulling back a bit from those highs. They made some highs. They made new highs yesterday. Hit a high of $70.73. The high that we had back here on September the 19th of 2012 was $70.58. Yesterday's highs was $70.73. And then today we hit a high of $70.85. The NASDAQ was showing a little bit of relative strength, all right, until it pulled back the same way opposite. The IWM was showing relative weakness to the other indices today. So the Qs, I think the Qs may try to pull back a bit. So, either way, I will use these short-term moving averages as a gauge. If we do pull back, look for a pullback down towards 70. If we pull back more than 70, look for a pullback, I would say, down here towards 69.50 or so. All right, you guys are pretty familiar, if you guys been watching these videos, how the triple Qs loves to break out and then pull back in. All right, same kind of action it had right here. All right, when we were breaking out. When we were breaking out, we trapped those, man, it's been a long day, folks. We trapped these longs right here. We faded down. If you come back and take a look at the prior price action here, we had this nice little consolidation that was taking place right here. We tried to break out. We trapped those longs in. We broke down, trapped some minor shorts in right there. Whoever thought we were going to get that gap fill action down there. So the Qs have been trading choppy. If you've been trading them, you want to make sure you do not get caught trying to buy the Qs up here. Obviously, you do not want to buy the Qs up here. Hopefully, you're not doing that. And if you're taking trades that to the long side at these levels that we're at on the market, hope you're managing your risk accordingly. All right, now let's go ahead and take a look at the small cap, the Russell 2000, which was showing some nice relative weakness today to the other indices. We can see we're back below that key 92.70 level. So the Russell 2000 is having a tough time trying to hang above this 92.70 level. All right, and it's having a tough time trying to break over these 95s. So if the Russell 2000 sells off, look for this thing to try to make a move possibly back down towards this 89 level. All right, you can see we have a nice little air pocket right here, back down towards the 50-day Sorry, that's actually the 100-day simple and exponential moving average. And how about that volume that came in today, folks? Look at that volume. I mean, come on. This is not. That's not good. So we'll see how this plays out. If the market's still off tomorrow, the first index you want to attack if you like to trade those leverage ETFs would be the IWM, and that would be the TNA, and then maybe the TNA and the TZA. TZA for the short side, of course, and the TNA for the long side. But right now, I would be focused on the TZA. Let's take a look at that volatility index, which spiked up today. Well, actually didn't spike up yet, but it held that nice little base at 1350, and it was trending to the top side for most of the session. I know some of the guys that are in the room like to trade the VXX. Maybe the VXX get a breakout. Well, it already broke out, but if the VXX back above 20 and holding can make a nice move up towards 20.5, maybe even 21 to retest this 50-day moving average. Another thing that you can note here is we have a high base, we have a low down here, and we have a high base right here that's been trading this little range. So if we start holding above this 1950 area, all right, off this little high base action, something could be going on here. So make sure everything's kind of lining up a bit here. So make sure you're on your P's and Q's. If this market does decide to fade down a little bit, you know how to take action and make some money. All right, what else are we looking at here? Let's take a look at that dollar index, which got a little bounce today after selling off. You can see this little possible bottoming tail down here. All right, if we hold above this 81.50, look for this to try to retrace back. All right, this key trend line from the downtrend that we broke right here. You can see how we shook below it and we're still holding it. All right, from this little momentum trend line that we had right here that caused a nice little break on the dollar real quick. So keep an eye on this little 81.50 level, okay, guys? If you take a look at the euro dollar, let's see what that did today. Euro dollar did a little breakout reversal, 132. So this could be a possible bull trap right here. Tomorrow, if they cut the rates, I mean, you have to expect that the euro's going to sell off, all right? And if it sells off, we got to see how much it's going to sell off, all right? We do know that 130 support, and we do know we have some resistance right here at 132. Keep that on watch. All right, let's go ahead and talk about some stocks. You guys know how the commodities were, so I don't want to waste any more time and go through the commodities. But gold, gold, silver, all the commodities were weak across the board. So let's go ahead and jump into some charts here. First of all, taking a look at Apple. Apple, pulled back a little bit today. Nothing too crazy. It gapped up and sold off. We still, remain above this 50-day simple and exponential moving average, and these short-term moving averages are coming up right here. One thing to take note of, though, is that we did rally all the way from 385 to a high of 445. So you're talking about 60 points, guys. There's no reason for you to be buying Apple up here. You want to wait for some type of pullback. But let's take a look at some of these other tech stocks that had been performing pretty well. IBM gapped down from the earnings. This one has been on a tear recovering. Little pullback action right here. All right. Maybe see if it pulls back towards 196 and tries to stabilize a bit. Not really doing much there. Amazon had a little reversal day yesterday. Trapped some people that were trying to short the lows, but you can see it got smacked right back down. Amazon's a little bit interesting. It may be if the market sells off, this may be a stock to short for some more downside action. Maybe back down towards this 243. We break below 243. Maybe some action down here towards 238. You can see that Amazon has been trading in a range, all right, between 252 and 275. And now we're trying to break below this 200-day exponential and simple moving average, which we have not broken below since, let's go back 2 years here. We have not been below the 200-day moving average since back here in April of last year. So if we break below that, you can see we bounced off of it back here in November. If we break and hold below that, we could definitely get some sell side action. If we break below those 243s, the next level you want to watch is going to be right here from this little consolidation area, the top of that consolidation, right here at 240. Okay, so if we hold 240, we could probably get a bounce there. So we'll see how that plays out. Another thing to take note of is that for the past 2 quarters, all right, this thing has been trading in a range. It's been trading sideways between above 252 and 275. We have a lower high, lower high, lower high, lower high, and then now we're trying to make these lower lows. Okay, so the trend could be changing in Amazon. It's breaking the lower base of a range right here. So keep that on your radar. What else do we have here? Let's see. Last quarter, what do these guys do here? Last quarter, they reported 21 cents versus 29 cents estimates. So they missed. This past quarter, when they reported last week, they reported 18 cents versus the estimate of 8 cents. So they beat, but they probably fluffed their numbers or something like that. So we'll see. What else do you want to take a look at? Intel, this stock has been on a tear lately. All right, still continues to perform pretty strong. The semiconductor stocks, this one is a winner, along with Microsoft, which has been on a tear. MSFT pulling back against its 33 level makes sense. I mean, the stock has rallied all the way from 26.50 in early January to a high of 33. And then in the short term here, I mean, even in the short term, this thing has rallied all the way from 29 to a high of 33. So we're talking about $4. All right, so we're talking about 10% here in the stock. All right, what else do I want to talk about here? The energy sector. Let's take a look at some of these powerhouses, some of these larger integrated energy companies. ExxonMobil, this one has been doing nothing. This thing just keeps on chopping around 88. And if it gets back below 88 and holds below 88, it may try to come back inside and feel this action right here. All right, Chevron, another energy stock here, a big oil company, integrated energy oil company here, pulling back off those highs, off those 122 highs after rallying from 114 to 122 in a matter of 2 weeks or so. Okay. What else? Halliburton is one energy stock out there that's actually holding up pretty well. We actually traded this on Monday and made some decent money on it. You can see it's breaking this nice little downward channel right here. If Halliburton pulls back and back from maybe some of this weakness that we get in the market, if Halliburton pulls back to this 39 area or 40 area, look for that to be a good area for a pickup, because that will be a back test of this broken trend line. All right, now I'll be looking to maybe dip in some call options there or put on some call spreads or something. I actually called this for a trade out yesterday, and my guys that trade on the desk made some money, and I even got my friend to buy some call options in the morning, and he made some decent money on that. And then if you held the call options overnight, you just pretty much got flat from today's action. But aside from that, guys, we'll have some more stuff to watch tomorrow. Facebook, well, before I leave here, Facebook had earnings after the bell. Let's take a look to see how they reported. Bring up my after hours action here. Bear with me 1 second. And looks like the stock spiked up and then sold back down, and it's trading sideways. I have not had a chance to look at their numbers. I will tonight when I get home. But aside from that, have a great night, folks. I'll catch you guys bright and early in the morning. If you would like to start your professional trading career, contact me at ccooper@wallstreettrading.com. We have offices in New York and Miami. We can help you jumpstart your career. And that's about it, folks. Have a wonderful night. Cheers.